Welcome back to the exchange. October has been tough for Tesla. The shares are down 17% after the company fell short on Q3 deliveries and failed to impress with its robotaxi reveal. The EV maker reports after the bell, and my next guest isn't expecting to see unit growth this year despite lower prices and says 2025 ain't looking too good either. His 120 price target is one of the lowest on the street. It's 44% downside from the current price. Let's bring in Toni Sacconaghi, senior research analyst at Bernstein. Tony, welcome to you. And the problem with Tesla is it goes through periods where it makes the bulls sound like geniuses and then the bears sound like geniuses, but it's never one or the other consistently.
Good afternoon, Kelly. Yes, it is a really tough stock to trade well. And sentiment shifts largely on what Elon Musk is saying and what investors are hoping might happen based on those statements. And so tonight we do get real results. We know what deliveries are going to be. I think investors will be focused a little bit on where margins are, which is always a key question. Tesla's had to be more aggressive in its discounting and its financing over the last several quarters. And so investors will be looking at automotive gross margins, ex regulatory credits. That's a key metric. And I think more importantly, they'll be listening for what Musk will say about next year and potential growth. When will the tweaks to existing models occur? And do investors feel confident that Tesla can start to grow again?
What is your expectation for margins ex credits?
So last quarter, Kelly, they were 14.6%. We're forecasting them to be slightly down. There are pushes and pulls on that number. We think the commodity cost environment has improved, but Tesla's also been more aggressive on financing, and Tesla's also cut costs. So we expect them to be flat to slightly down this quarter from the 14.6 level last quarter.
Is it fair to say we only care about these results because there wasn't more razzle-dazzle from the presentations that could have shifted the focus more toward software, autonomy, future services, tech multiples, tech valuations, and not the automotive business?
I think so. I think after the robotaxi event, investors were sort of like, okay, well, that's not happening in the immediate term. So let's focus on what is happening fundamentally in the business. And so, yeah, I think there will be a focus. But again, looking forward, we know what deliveries are. Tesla reports those at the beginning of the month. So it is going to be about margins, and then it's going to be about what can Tesla tell investors that will make them feel confident that the company can get back on a growth trajectory.
Why do you think the shares should be trading at your price target? And have they ever been at that kind of multiple in recent history?
Yeah, I mean, it's difficult to ascribe a multiple to Tesla. Certainly, they've been at my multiple because earnings expectations for this year, for 2024, were $7. They're now under $2. And so earnings have fallen by 80%, and the stock has not fallen by 80% or 70%. So clearly they've traded at this multiple. They're still trading at nearly 100 times earnings. And that's based on the belief that there's something more than just the current earnings stream, likely self-driving revenues from full self-driving software sales, likely from robotaxi, and likely from Optimus Robot. And that's what becomes very difficult. We think the automotive business itself is probably worth $40 or $50 a share. That would make it almost the highest highest valuation among any traditional OEM. And then the rest of the valuation is how much you want to ascribe to Tesla's other businesses. And that's where the difference of opinion comes in, and why there's such wide range of valuation among Tesla is some people believe that those income streams could be very, very large. Other people are more conservative on them, and we're certainly in the latter camp.
Yeah, $40 or $50 a share for the automotive business, and the shares are at $213. Real quickly, is there any event risk around if Musk ends up ascending to some kind of role at the White House, or are investors comfortable with the idea that perhaps he's already not giving Tesla his full-time attention these days?
Look, I think that's always been a concern with investors. It's somewhat been mitigated over time because Musk has proven that he can do many, many things very well at the same time. There are obvious questions about whether there could be potential conflicts of interest if he does become very engaged in politics and takes on an official role, and whether that might prevent him from continuing to act in the same capacity at Tesla or other companies. So I think that's the bigger question rather than is Musk going to be incrementally fragmented. He's proven time and time again that he has an incredible capacity to manage multiple businesses.
And finally, Tony, is there anything on the deliveries on the margins front, anything that could perhaps reignite another bullish moment for Tesla here tonight?
I think certainly, look, if margins were to improve and Tesla talked about growing units this year and growing units much more next year, you could see more life in the fundamental story. Right now, I think the feeling among investors is that the car business is somewhat on hold until they come out with a lower cost model, likely in 26 or 27. The question is there something in the interim that investors can get excited about, that some of the tweaks to existing models will occur, they'll be meaningful, and they can lead to growth next year? That could make investors feel more positive.
All right, well, we know what to listen for. Tony, thanks for your time today.
Thanks, Kelly.
Tony.